Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at dividends paid actually on the cash flow statement, and as we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition and then we'll go on to look at some examples. For this particular experience, we're just going to be looking at the definition of a dividend so that you have an idea what we're talking about when we look at the cash flow statement. A dividend is a distribution of a portion of the company's earnings, of the retained earnings, which is decided by the company's board of directors to a class of its shareholders. It could be preferred or common, etc. Dividends may be paid out monthly, quarterly, annually, or in any other way the board of directors sees fit. Dividends may also be paid in cash, stock, or property. The dividend is most often quoted in terms of the dollar amount each share is going to receive, referred to as a dividend per share. It can also be quoted in terms of percent of the current market price, referred to as a dividend yield. Now let's go look at an example. For this example, we're looking at Walmart Stores Incorporated, looking at the cash flow statement, and of course we're looking at annual data here, and again on the actual cash flow statement, you are broken into three main categories. You start off with the net income, it's taken from the income statement, and then they start to show you where the cash flew in or out in these three different categories. At first we kept the categories being the operating activities, and this is what actually the business selling its product or service, this is how it's generating the majority of its money. Then the investing activities, another method that a company could see cash flow in or out based on the investing activities, whether the company is making exterior investments or capital expenditures and things like this. Also, you may see money flowing in. We talked about that in the previous videos from the investing activities. And then you get down to the third and final section here with the financing activities. And this is where you will see money flowing in or out from the company from the actual financing activities. And today we'll be looking at the dividends paid. This is typically the first line item under the financing activities. Now, before we get started here, a lot of people ask me, do you invest in companies that pay a dividend or do you not? And a lot of times you can tell from their question that they're really wondering, is a good company a company that pays a dividend, or is a good company a company that doesn't pay a dividend? And there's really no hard and fast rule on that the company is good long before it pays a dividend, or a company is bad long before it ever pays a dividend. So that the actual activity of paying a dividend doesn't make a company good or bad. So don't get stuck in that. We'll try to give you a little more insight here, better understand dividends and how it works out. But all in all, when you looked at the balance sheet, we talked about this in the past, whenever you look at the balance sheet, you have the assets and you add in the liabilities, and what's left over is known as the shareholders' equity. So let's imagine a case scenario here where you have a company, let's say that Walmart, for example, is just happened to, for whatever reason, didn't have a net income for a particular time period. So there was no, let's say they had a loss. Well, then of course you would not see a positive number here, most likely. And if there's no positive number here, then how can you possibly have money going out here and still have a positive number? You can't. So you start to do what's called bleeding. You're seeing the company lose money. Now the dividends down here, dividend paid section, you could still have a dividend being paid even if you weren't making a profit up here, right, on the operating activities. So what would be happening when that happened? Well, a company would be actually cannibalizing itself. It would be pulling profits that had been made from previous time periods and paying that dividend. So a lot of times when a company gets in trouble, they'll actually suspend their dividend or cut their dividend, reduce it, so as to bleed less cash. And that's something that you think about whenever we talk about there's three different ways a company can raise capital. In the financing activities, you can raise capital in here as well. And one of the methods would be to simply cut or reduce the dividend paid. That way you wouldn't have this cash flow flowing out of the business. Right here you can see it's $5.3 billion. That's a good chunk of money there. So if Walmart were to say, we need this money, we'd rather not lose that money right now, so we're going to go ahead and cut the dividend. So you can see people doing things like that and understand why they might be doing that. Okay. All in all, whenever you're looking at the situation where you have the cash flow statement, the main thing to take into account, of course, would be that you have total cash flow from the operating activities. In this particular case, we're looking at $25.6 billion. Then you subtract the capital expenditures, which we consider that's going to be something that a company has to do just to continue to grow itself. So that's 12.8. You subtract this, and this will give you the remaining number will give you your free cash flow. And that free cash flow can be used to pay dividends, like you have done here, to buy back companies' own stock, to retire debt the company may have, long-term debt, things of that nature. So it's important that the company have free cash flow, and when they have it, then they can do different things. So the fact that a company is paying a dividend is a good thing as long as it's coming from the profits being made right now. Like I said, if a company were making a loss right now and still paying a dividend, then the company's just actually going in the hole that much faster. So again, just because a company pays a dividend doesn't mean anything. Just because the company doesn't necessarily mean it's a good thing, or doesn't mean it's a bad thing either. Okay. All right, before we go any further into this, let's make sure that everyone's aware that the negative number here is, it's in a negative number because money or cash is being given to stockholders. So it's being paid out to stockholders in the form of a dividend, and that's why you see it as a negative number. Cash flow going out of the company will be a negative. You will never see it a positive on the dividends paid because shareholders will never pay a dividend to a company. It doesn't make any sense, so it will never happen. It's important. Now, you could have a zero where a company does not pay any dividend, but all in all, that's something to think about. All right, let's get into the meat of this now. When you're thinking about a company and whether it's paying dividends or not, the basic concept that you need to keep in mind is what the company is doing with its money. That after it's paid its bills, if you get this net income, you've made a profit, and you've paid your bills, and you're left with this amount of free cash flow. A couple of different concepts should come to mind. A, what was the company doing to make that money? Can it continue to do that? Can it grow that? And was it making a good return on its investment? Because if it was, then why wouldn't I want the company to take those retained earnings, that free cash flow, and put it back into the company and produce that much more? It'd be a good thing, wouldn't it? It makes a lot of sense. If it's paid out in the form of a dividend to an investor, then the company is actually not going to be able to grow as fast as it could had it just retained those earnings and reinvested it into the company. A lot of times, especially substantially sized companies, will actually do a little bit of both. They'll have the free cash flow, and they'll make some investments, and they'll expand their capital expenditures, and maybe actually buy back some of their stock. You'll see the negative number here because the company's buying back their own stock. You could see them paying off their own debt, things like that. You're not seeing that right here on Walmart's example here, but a company could also do that, and then also pay a little bit to the dividend, those who are seeking a dividend, because a lot of people like to have a dividend. It helps them for different various reasons. So it's important that you understand why a company may be doing various different things, because they're trying to satisfy a lot of different people who are shareholders. But all in all, like look at Warren Buffett and Berkshire Hathaway, they don't pay a dividend. They don't pay a dividend because he knows he can do more with the capital than you're going to find out there just in your average company. Now, if that were not the case, if you have a company that's just taking their retained earnings and basically blowing them, wasting them, well, then of course you'd want to tell the company, no, pay it out to me in a dividend. That would make more sense, because then you can go find a better place to put that money. So that's basically the rough sketch of the argument between paying a dividend and not paying a dividend. It's really a personal choice as to whether or not you invest in a company that pays dividends or not. But the reality is you need to analyze the company and ask yourself, is it smart for them at this point in time to pay a dividend, or would it be wiser for them to reinvest into the company and grow what's already working? That would make a lot of sense to me. So that's the basic idea behind the dividends paid section of the cash flow statement. You know why it's a negative number, because the cash is flowing out to shareholders in the form of a dividend, right? Okay, now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.